One of the main reasons that we use stock charts is because they tell us what is likely to happen in the future many times. We're going to talk about support right here. DM had support at $10 way back here in September. The closes were all above it in this area. There was only one close, it looks like, below that level of support, and it never really closed below $10 during this 3-month period. And as you can see at the bottoms, there was pretty high buy volume. There was a really long wick on a hammer, a bullish candlestick, 3 times. Those are 3 hammers that went down and tagged the 950 area and bounced hard, closing much higher than they were earlier in the day. So historically, DM has support on a closing basis at the $10 range and intraday 3 times at the 950 range. That means sometime during the day the price went down and tagged 950 and then rallied. Okay, so that's what support means. Support can sometimes be a good time to buy, especially if you see a hammer like that on really good volume and all the other indicators like RSI and stochastic are showing oversold conditions. It's at the lower Bollinger Band. Okay, so a nice bounce play. Unfortunately, this chart pattern is a bearish descending triangle that has taken almost a full year to develop. So unfortunately, not being able to break above this blue line of resistance is rather bearish. And if it did, here's the biggest volume in quite a few months. So it is trying to get above it again. You know, any break above the blue line here would be bullish, but because the chart pattern is bearish, and we'll get to them next, but first you have to understand what support and resistance and trend lines are first, to, you know, because that's what chart patterns are based on. Okay, so basically what I see here is a bearish descending triangle. Okay, there's the triangle, and a break below support on a closing basis of 10 and especially 950 would be extremely bearish. A break above the upper trend line on really good volume, much higher than anything you see here, would be very bullish. So basically, support is somewhere a stock has historically been known to bounce. And it's also a level that must be held above, or this chart turns much more to the bear than to the bull. Now let's take a look at ENER that had a very similar setup as the previous chart I just showed you. It is forming a descending triangle with support down here. Here's the triangle. The resistance line was right here. Support is all in this area right here. Okay, this is what happens when a descending triangle breaks down below support. Okay, now first of all, this is what I call the pump before the dump, because on relatively good volume, okay, it should have been more to count, the stock did finally break up above the red line of resistance. Okay, but volume started falling off. When it finally broke below this first level of support, it went down and hit this second area of support, and within a couple of days had crashed right through it. Okay, then it bounced up to what used to be support, and it became resistance and dumped again because it broke below this close right here on that big red candle right about here. And that was at a point where, because of the volume, a lot of people said, okay, this one is definitely not going to go up. It is not going to bounce and give us a decent oversold rally here. The shooting star said so. The fully engulfing red over shooting star said so. The breakdown of support right here said so. Okay, then it came down, fell, set a level of support here. Okay, 3 times. It's also setting up another bearish descending triangle chart pattern. Okay, so the whole point is support is very important, because when it finally breaks below it, you can go from $10 down to about $7 in just 2 or 3 weeks. Now let's talk about resistance. Resistance can usually be a horizontal line. It's a line in the sand where a stock has trouble rising above. That's why it's called resistance. Every time it gets up there, it bangs its head up against the ceiling and drops back down to the bed or the middle Bollinger Band area, which is bullish, and bounces. Okay, so the main thing about resistance is getting above resistance on high volume is bullish. So whenever you see a level of resistance with a stock breaking above it on above average volume, that is bullish. Okay, it breaks up above it, it pulls back to the level of resistance, it bounces, and it breaks out into blue sky territory again with even higher volume. A lot of traders saw this day right here a closing price above resistance on high volume. Okay, now they could have gotten in any one of those 3 days, okay, because this, as soon as volume started to exceed these 2 days on this day, it probably broke above this intraday high and took off into running into blue sky territory. So resistance is something that a stock wants to rise above to become bullish. And it needs, for it to be convincing, it needs to have above average, or in this case, extremely high volume in order to accomplish it convincingly. Here is another example of a number of levels of resistance. First of all, this is the level of support, or the rising trend line, that forms a bullish ascending triangle with a flat top. This is where all the resistance is, right in here, that needs to be beaten. Okay, and as you can see right here, there was a level of resistance that was broken again on super high volume that sent it up to this level of resistance, where it struggled for a while, broke out to this level of resistance right here, and pulled back to the trend line. Okay, it's forming the nice looking double bottom chart pattern here with a neckline right here, you know, in this area of resistance. And when it finally tightens up the triangle and breaks above all resistance, the volume is massive again, and that's exactly what you want to see on a stock breaking out of a bullish ascending triangle chart pattern with volume. Now let's take a look at how a level of support, when finally broken below, becomes a level of resistance. Okay, the stock hits a top on extremely high volume. Okay, tops and bottoms are generally characterized by the highest volume. Okay, it falls like a rock. Here's what I call a DCB, oversold rally. Okay, then it forms a bearish head and shoulder chart pattern with the left shoulder here, the head right here, and the right shoulder here. The neckline support of this bearish chart pattern is right in this area. When it falls below it, okay, it's called breaking support. Generally, right away, it will go back up to the support line, which will now become resistance. Looks like about 7 days of resistance there. When it finally breaks below this old support, it falls like a rock, and it sets up a new area of support right here. Now let's talk about a stock that breaks above old resistance, sets new highs, and then pulls back to make it support. Now remember that breaking above resistance is bullish, and breaking below support is bearish. Okay? So the stock breaks out to new highs. It pulls back to this old level of resistance and bounces, making it support. Okay, here's the next level of resistance right here. The stock breaks out to new highs, pulls back almost to this old level of resistance, which is bullish, above the line is bullish, and bounces and breaks out to new highs. Okay? The stock pulls back to this old level of resistance right here, which is a little bit high. Okay, and makes it a level of support where it bounces twice. Okay. Here's the next level of resistance. The stock breaks out. It pulls back to this old level of resistance and makes it support.